All right. So you and a lot of other people are painting this Fed as divided. You also added that they're cautious. I want to ask you, why isn't it just a healthy debate? Why aren't we describing it that way? There's a lot of things going on in the economy. Obviously, the government shutdown. They didn't know that back then, but there's tariffs. There's questions about the labor market. There's immigration changes. Why isn't this just a healthy debate with so many questions up in the air right now?
Look, I think you can phrase it that way. And the bigger point is the one that you made. There's so many questions up in the air, and most importantly, about the things they care most about, which is the state of inflation. You saw some of them say inflation would be back to closer to 2% if it were not for tariffs. Others saying absolutely wrong. You know, I think they're all focused on the labor market. There, I don't think it's so divided as just very uncertain. So you can certainly call it a healthy debate. But at the end of the day, this debate has to be resolved. And so that's the issue that markets and analysts are focusing on, how they're going to resolve this, as you describe it, healthy debate or this division.
All right. You've been in these rooms before as the Fed's met for policy decisions. Hypothetically, if you were in this room and the government shutdown continued up until the Fed meeting, how would you view the lack of economic data? How would you work around it? How do you think the Fed should work around it?
Well, I think you heard a little bit from Austin Goolsbee earlier on the show, or at least a recording. And he said basically they can substitute, less high quality data sources. They can bring in state sources. They can look at indices, et cetera. But at the end of the day, the analogy of, they're driving through a fog that was already pretty thick and now it's gotten thicker. And so I think they're going to have a healthy debate, to use a phrase, of given that we're data dependent and there's no data, given that we came in being sort of undecided and divided, it wouldn't be off the table to say maybe we should take a pause. I think the challenge for them is if they decide to move, how are they going to describe the rationale for that? That's going to look like anything other than we sort of guessed at something. And they position themselves as data dependent. So if there's no preset plan, as they say, they're data dependent. I think they should have a discussion, a debate on, is this a good time, to take a pause? They weren't totally committed, not all of them, to a predetermined path. And so while they included a sentence that said, likely to reduce rates, I don't think that necessarily precludes them from saying we don't have enough data at this stage to make a determination, and we already thought we were pretty well positioned anyway.
All right. They're data dependent, and they don't have those key economic reports. They didn't get the jobs report. They may not get PPI and CPI, but there is other data out there. I'm looking at Bank of America. They just put out some research on credit card spending, up over 2% for the week ending on October 4th. We have some pretty key earnings reports coming up later today. We got Delta Airlines and PepsiCo. Won't that provide some data to give the Fed some insight on inflation, consumer spending, and things like that?
It will provide some. There's no doubt about it. So there are surveys, there's state data, there are the kinds of reports that come from the private sector economists. Some of those reports themselves will have to slow down because they depend on the same incoming data. But yes, to your bigger point, there are numerous data sources around the state of the economy. But over time, they just get further and further away from reality. And the Fed needs to focus on the reality. So, look, I think we'll wait and see. A cut will definitely be on the table. But I would just caution the markets and others to not presume that there's going to be a cut, because there's plenty of reason for an already divided Fed to say maybe we'll take a pass this time around. That would certainly please some of their members. It will displease others. But whatever they do, there'll be some who are really feeling that maybe it was not the right move at this time.
All right. We've heard Jay Powell talk about this, that a lot of AI spending is what's really driving GDP right now. I'm looking at the Atlanta Fed GDP Now tool. Latest estimate is 3.8%. How does the Fed factor in that so much of this growth is coming from the AI trade? There's been a lot of questions about it. Do they pay attention to those questions? Is that a concern that, while we worry about concentration in the market, you hear a lot of people saying, it's too much concentration. Does the Fed worry there's too much concentration in GDP growth and the fact that it's coming seemingly primarily from one area?
I think the Fed takes that into consideration with a number of other facts. But at the end of the day, growth is still growth. And the vast majority of growth still comes from consumers who seem like they're doing well. You just referenced some bank data. So, yes, they are aware of the debate. They have referred to how much of the growth is coming from the AI sector and AI CapEx. But I don't think that's necessarily the fact that it's perhaps circular, at least being described and discussed, is sufficient for them to say, well, maybe it's not real. I mean, we know it is real. The question is, how sustainable is it? But I don't think that the question of future investments and how sustainable is going to drive them to make one major decision at this stage. That's again, a very cloudy crystal ball with folks on both sides of the longevity of the AI spend. So I don't think there is enough clarity for them to make a decision. I think they will take note of the uncertainty and try to watch it closely as they navigate a already very murky situation.